week ahead. Back, what happened on Friday? Obviously, well, a fairly sensational end to the week, really, if you take in Thursday's session as well, particularly on the S&P. But some big moves elsewhere, um, big moves on the currency space. So we'll talk about this shortly, but let's just look at the S&P first. So just as a recap, I mean, you all know what happened here. Thursday was mostly about Draghi, in that stocks came in with a fairly hefty sell-off, just general disappointment that ultimately Draghi didn't, at the very least, didn't increase the chances of QE happening in the Eurozone. I think markets were looking for an increase in the likelihood of quantitative easing actually happening, given the fact that we'd had a string of weak data points. Quarter three is looking like it's going to come in similarly to quarter two, in that there ain't any growth, and we continue to have a persistent deflation risk, and so markets really were desperate for just for something from Draghi to reassure us, and we just didn't get it really. So heavy sell-off. Of course, equity markets in Europe suffered the most, but there was a remarkable rebound in the US in the second half of Thursday's session. This teed up Friday, and we did break up above Thursday's high before the payrolls number, but then the payrolls number came in, and of course this dominated everything. Here's a look at the chart, just as a reminder. Really strong number for the month of September, plus about 69,000 jobs added to the previous 3 months as well, making this chart look very, very healthy indeed, continuing the best annual performance for payrolls in well over 10 years. So strong jobs numbers. The equity reaction, I mean, this 1 hour chart perhaps doesn't quite tell the story. Of course, it was choppy to begin with, and the S&P didn't really properly start pushing higher until later on in the session, and then we broke and made new highs, and we're kind of continuing that theme through the Asian session overnight, and this morning we just popped up before the European Open here, breaking up above the October high, so that we have a new high for the month here. It's only the 6th of October, obviously, but a new high for the month up through this 50% fib level. I zoom back a bit, you'll see that this fib series is looking at this sell-off that we've had, in recent weeks, from the all-time high 2014 down to the low point 1918. This is a 100-point sell-off, give or take 4.25 points to be exact. So, or 3.75 points. So yeah, basically a 100-point slide to the downside, and yet it only took less than 48 hours to reverse half of it. So, clearly that's a fairly impressive rebound, to say the least, especially as you see on the right here, my DAX chart, you can see it's still flagging. You've got new highs for the month here this morning on the S&P, but for the DAX to be new highs for the month, well, you've got to add another more than 200 points to even get to the Monday high, or not Monday, October the 1st high, well above 9,500. So you can see you're getting, as Will said a minute ago, just a continued divergence between these two economic regions. So, certainly an interesting one, to say the least, last week. Let's look at the currency space. I think this was an easier trade, as we were talking about on Friday. The break of 125.79 was on as a trade off the payrolls figure, and an extension lower. I mean, we're just getting a lift here this morning. This is nothing more than just a pullback. It's just a consolidation with a bit of profit taking. So I need to go to the weekly chart to kind of get a reference as to where we are in the grand scheme of things. And we broke the 2013 double bottom, and this thing just keeps on going. I mean, quite remarkable. 27th of August, the week beginning the 27th of August, or the start of September, perhaps. So We're on 2-year highs, highs. We're on 2-year lows here. But the remarkable thing about this is how quickly we've reversed off 140. We're 150 points to the downside, 1.4 here at the start of May, and here we are, start of October, and we're trading at 125. We have officially, in the futures at least, 12 straight down weeks in a row. What market has 12 down weeks in a row? I mean, this is not normal, and we'll have to see whether we go for lucky number 13. But perhaps, given looking at the data calendar this week, which is fairly empty, and as is typically the case, the week after payrolls tends to be a fairly slow affair in terms of scheduled data. We've got a lot of monetary policy angles to look at this week, but not so much on the kind of tier one headline economic data front. So maybe I don't know. You wouldn't want to go long the euro. You wouldn't want to go short the dollar. But whether this trade is going to extend again this week, we'll have to see. I mean, technically, of course, it's still heavily negative. Technically, there's nothing in the way here until we get to 120 or 120.50, more accurately, the 2012 low. So, certainly from a technical perspective, it's heavily negative still. Actually, it'd be interesting to see the RSI on this chart. Let's have a look. Let's just get that on here. Assuming RSI measurement. Yeah, here we go. Oof, wow. Down to 15 on the RSI last week, which is quite extraordinary. We're going to get to 0 at this rate. But yeah, obviously dollar strength continues. Dollar index up at 4-year highs. And if we look at cable, really significant technical factors occurring. The break of the referendum low from the 10th of September on cable, then the follow-up break of 160. We have the low of last week down here, 159.50. And again, this is a remarkable sell-off as well. It's not quite as much as the euro, but I tell you what, it's not far off over the last few months. 172 down to 160. So it's virtually the same magnitude. If we go on the weekly chart, then for cable, this is important around this area because the 160 handle's huge, and so far it has been resistance today. 160 is obviously psychologically important, but it's the 50% fib of the 12-month rally between July 13, July 14. So this is a very important landmark here. And of course, this is being driven, certainly the latter part is being driven by dollar strength as we continue to get strong data from the US. But it's also, remember, we had Goldman Sachs musing about how they think ultimately that the Bank of England may well start to raise rates first as we push into 2015, perhaps end of Q1. You might see the Bank of England go for a hike, and then you might see the Fed follow that up with a rate hike in Q2. See, this is the argument that was driving this pair higher earlier in the year, is the fact that ultimately the UK economy is hotter. The UK and the Bank of England are likely to raise rates first. They're going to be ahead on the rate hiking cycle, and this is really what led that outperformance on sterling. And as time goes on, and certainly what Goldman Sachs think, they think that ultimately, yes, they might start first, but they're going to raise rates slower, and that the US's pace of rate hikes will be faster, and therefore ultimately you've seen this currency pair reverse half of the gains over this 12-month period where the UK outperformed. So certainly currency-wise, you've had a lot of volatility. I mean, because it's been a pretty bad year for volatility in a lot of these markets, fixed income, equities, FX. We're about to get all the Q3 earnings reports through. Alcoa start the earnings season on Wednesday, but it's the banks that will be following up probably next week. We're going to get all the big banks, and the early signs are that actually their trading revenues will be fairly impressive for the month of September in particular, as a result of this pickup in volatility, as a result of just things like the PIMCO effect in the bond market and how spreads have widened and volatility's increased. This gives banks, of course, extra edge, and so we're expecting to see decent numbers in terms of earnings as the banks really and the banks are front loaded at the start of the earnings season. So we'll see how this goes. Now, let's just look at the commodity space. Given all this dollar strength, here's gold. So I mentioned this level last week. I think the spot price has actually broken this level. Spot gold traded below and actually made new 3-year, 4-year lows. Because if we go back, the last time we were lower than 1180, if we go back to 2010 here, the summer of 2010, so it would be a 4-year low. Now, overnight spot gold did break this. Now, futures have not. So, futures really just testing this very, very important technical level here. And this is something to be very aware of. Anywhere around 1180. To be exact on the futures, the low in June 2013 was 1180, bang on. Then the low that we had in December at the end of the year was 1181.75. Okay, so this double bottom is huge. If we do get down and test that, then we'll have to gauge things. If the dollar is still strong this week, we may well see a break of that, and that's going to be an interesting one in terms of a technical breakout. So certainly commodities still under pressure. You can see oil's trading at $90 here. If we just look at the daily chart, we're still technically very bearish. It was Thursday we had the breakout down to 88, and then a phenomenal rebound. I remember looking at that hammer on the daily chart, but unfortunately for this hammer, and they don't get much better than that, I have to say, we had a bearish candle for Friday as the dollar strength came in off the payrolls figures, and ultimately we had a down day. So this candle, this hammer is kind of lost in amongst this move now, and Friday's candle certainly offsets that bullish reversal signal that we had on Thursday. So we're around $90. Still an input. I know Thursday and Friday we crossed over this is the September low, but it's still important, around 90.43. So very interesting, to put it mildly. This week highlights. Let me just. Bring up the daily calendar to start with, which, as I said earlier, is fairly empty, I'm afraid. So here's the daily calendar. Now, we've had some data overnight, and the factory orders figures from Germany were not good. Nicht good. They came in, I'm just going to get the figure for that. We were expecting minus 2.3%. Sorry, I did have the figure. This was announced. I did have the figure. I've now lost it. I've forgotten it. Hang on. Yeah, so minus 5.7%. So actually it was worse than the bottom end of expectation. It was the sharpest drop in factory orders in Germany since 2009. And this is for the month of August, bear in mind. So it's a little bit late, but it's still showing us what we were being told last week. And that was that ultimately quarter 3 is again very weak, as it was in quarter 2, as it was in quarter 1. Overnight or over the weekend also, just a bit on the kind of European political front. We've had France being denied. So the EU have reportedly rejected France's budget plans. So this is where France have been looking, they've been trying to get their deficit down below the 3% handle, which is in line with the deal that the European governments set themselves the challenge of, deficit reduction and targets and getting deficit down below the 3% level in good time. France was supposed to get their deficit below the 3% level in 2012, but failed, so they got an extension. So they were supposed to do it in 2013, but they didn't manage that. So then they were supposed to do it in 2014, and they didn't manage that either. So they're again trying to ask for an extension to this. It's kind of ridiculous, to be honest. You have these targets in place, and consistently don't meet them. So it completely undermines the entire credibility of the targets in the first place. So actually nobody bothers looking at them anymore. They're not important. So it is another interesting one, and it's more pressure on France. And I tell you what, it's needed, because ultimately France have been well behind the curve on structural reforms, trying to get their economy more competitive. That's ultimately what they need to do. Yes, austerity is part of that, but it can't be just austerity alone. Ultimately, the French economy is suffering. It's weak. It hasn't grown for 12 months, and it's not likely to grow in the near term. And there's a lot of political pressures being put on Hollande and the Prime Minister, and so France need to up their game. So the EU are planning on rejecting France's 2015 budget, as France's plans are seriously non-compliant. This is according to EU officials. This is following France's Finance Minister Sapin submitting plans that would run a budget deficit of 4.3% next year, though still well above the 3% target. You're on that, but factory orders out of Germany were bad, really bad, but I guess not surprising. And we're going to get some retail PMI figures out of Europe at 10 past 9. These aren't massively important. So in fact, there's no US data whatsoever. So actually, kind of forget about economic data today. There isn't any of any significance. We've got Costa, who's dovish from the ECB. He's talking at 9 a.m. We've got some bond auctions down here, including France, but this is 12-month T-bills. They're not going to struggle to get rid of those. So perhaps France might begin to suffer and struggle on longer-term debt auctions. But this is very, very short-term. That's not going to be a problem. We've got EasyJet earnings. So this is today's lineup. So pretty much you can ignore the data calendar entirely. Later in the week, we've got monetary policy events. We've got the Bank of Japan's monetary policy meeting. We've got the Bank of England's monetary policy meeting. We've got minutes to be released from the Federal Reserve's meeting that they had 3 weeks ago. We've got the World Bank and the IMF reports, annual meeting. The World Bank has downgraded Chinese growth for this year and next year, but they've actually upgraded Asia ex-China. So the World Bank and the IMF are having their joint annual meeting at the end of the week, and we're going to get press conferences following that. They're going to talk about their growth expectations and so on. And then also we have a G20 finance ministers meeting towards the end of the week as well. So these are some of the key events rather than necessarily data. So Sandro's just actually reminding me we did get one thing to offset, and perhaps, you could even say it's more important. In terms of the factory orders figures out of Germany, which were very weak, we did get the construction PMI data, which was just a few minutes ago. Well, I say about 20 minutes ago. So this figure here, we didn't have an expectation, but last month, August, saw a dive below 50, which was very concerning. And we've just had a number announced at 8:30 that was 50, bang on 50. So at least it bounced back to non-contractionary. But ultimately, it's the kind of, that sums it up actually. It's a relief there's no contraction. There's no growth. There's no expansion. It's a relief there's no contraction. That's where we are with the Eurozone. There's no growth expectations. There's no optimism. It's just cross your fingers, close your eyes, and hope it's not bad. That's the kind of scenario that the region is in terms of economic prospects going forward. But that kind of steadies the ship. The DAX is trading right on the low point from Friday morning at the moment. We've been chopping around that for the last half an hour or so. So we've got a bit of a gap here, of course, on the DAX. Gapped opened higher. We had a bit of positivity out of Hong Kong as well over the weekend. At least the government buildings have reopened. Government officials are allowed back to work. But according to the BBC, Beijing are still absolutely not going to change their mind on anything. So that, keep your eye on that. It may be that that kind of just dissipates this week. You know, the students have been going at it for over a week now, and perhaps they are losing a little bit of appetite for getting a result here, and maybe that's going to fizzle out. And if that's the case, that's the absolute ideal result from the Chinese government's point of view. So we'll keep an eye on that as we go through the week. Okay, so yeah, I mean, expect a quiet one today. I know we've had such lively market movement over the last few sessions. Really, certainly Wednesday, Thursday, Friday last week were very active indeed, and it's unlikely we're going to get a follow-up and another day of intense activity, given the fact that the data calendar is completely empty. All right, guys, that's it from me for now. Enjoy the session. Thanks a lot.